And I am with you with the area of AFM. What are we going to do today? We're going to talk about another level of an important topic. The topic is the entire module A and the module B that I'll be covering up in this special series of the entire thing that we're working upon it. Basically, what are we doing today? Since this is a celebration for the 32-hour special classes which are there because of the Republic Day, so we'll be talking about all these things today in detail. We'll be covering a good number of questions. For all those questions, you can definitely look up to it, and the link of the same would also be available after the completion of the class. You can go and download the PDF of the same as well. Now, what are we going to do today? Accounting and financial management for bankers. We're going to talk about the modules. So let's quickly move on. And one more thing, everyone, if you like this particular session, then please go ahead and like it. Along with that, please go ahead and share it among your peers on WhatsApp, Facebook, or Instagram, whatever you feel, whatever you are using, Telegram, all these are the different platforms where all of us are there. So please go ahead and share it among your peers. And if you haven't subscribed to our channel yet, please do the same as early as possible. Okay, now what are we going to talk about? Here comes the first question, everyone. I hope it's clearly visible. Okay, is it visible now? Here comes the first question. This question seems a little longer, but it isn't, trust me. The question says that the difference between the cash book and the information in the bank statement have been identified. An amount incorrectly credited to the company's account by the bank. Lodgements into bank not reported in the bank statement. In terms of BRS, do you remember bank reconciliation statement, where our cash book and passbook doesn't really match? So we're going to find all those differences which are causing all the problems. So what are we going to do? We'll be recording those things accordingly. Dishonor of a check deposit into the bank loan, interest recovered by the bank, checks drawn by the company yet to be presented to the bank. Which set of alternatives correctly analyzes treatment of these? In cash book, what happens? First, second, and fourth. In bank reconciliation, we go for second and fourth. Uh, what would be the answer, everyone? The second one is in the cash book and the bank reconciliation statement, and then that is third and fourth in cash book and bank reconciliation, first, second, fourth, fifth, and then we have second, fourth, and fifth in cash book, and in bank reconciliation, first and third, and the last one is the 1, 2, 3 cash book, fourth and fifth in terms of this uh, bank reconciliation. What's the answer in this question, everyone? The answer to this question is actually B. In the cash book, dishonor of a check deposited in the bank, we came to know about, we have to correct it in the cash book. Fourth, the bank loan recovered by the bank, this has to be corrected in the cash book. In the bank reconciliation statements, all the other things would be taken up. Basically, what happens is BRS is basically called the bank reconciliation statement. When we talk about the bank reconciliation statement, what does it record, everyone? The bank reconciliation statement records the differences which are occurring in one particular area, that is, the cash book is not matching the passbook. And wherever the differences are, we have to reconcile. So we do not really change any of these. Rather, we put all the differences in one particular statement called BRS. This is a working note which is prepared, in which we are going to correct our cash statements as well, because our cash book might have bigger problems. We can never say that the problems are exist in the area of we cannot say that the problems exist in the area of the books of accounts, right? The problems normally exist there in terms of the cash book of the organization, not the passbook. We cannot say the bank was wrong. Banks are normally not wrong. Currently up to और भी ज़्यादा, because right now whatever we are doing, even if I deposit something, if I receive something, everything is a counter check counter vouchers are there, counter checking is there, and at the same time we receive everything on our phones. Matlab, if a Netflix charges has to be deducted, you get a message at around early in the morning, and in the late in the evening auto generated messages are received by us ki this particular amount would be deducted at this point of time. What is it about? This power of accounting is definitely because the CBS systems are there, automated systems have become better, but at the same time, the banking industry has definitely worked a lot in terms of their accuracy in the last few years, thanks to the technology and the learnings that they have definitely made. So technically, people believe that more or less the problems might be from our side, as sometimes we don't really come to know about the information that easily. Bank charges, we have never an idea till the time we don't go for the passbook. We just don't get the idea in this case, you know, right? Then comes preliminary expenses, discount allowed on issue of shares are the examples of capital expenditure, deferred revenue expenditure, or none of the above. What's the answer, everyone? Preliminary expenses, discount allowed on the issue of shares. When we talk about preliminary expenses, preliminary means the expenses which happened in the company before the company was made. The company isn't made yet. It is yet to be made. So that is called a preliminary expense. When it's a preliminary expense, the day the company was formed, this entire expense that you incurred to make the company what it is today, that is deferred revenue expenditure. Okay? We will write it off over the period of time, over the period of few years. We do it. Then a number of notes are appended to the balance sheet by the companies, which include information like contingent liabilities. Contingent means the ones which are uncertain. Make a market value of the investments, etc. This is due to the compliance of which of the following accounting concepts: business entity concept, money measurement concept, realization concept, accounting of full disclosure concept. Okay, when we give a lot of information, na, I hope it is visible clearly. When we give all this kind of information, na, there is a very important point that we do this. The reason is whenever we are doing the work in terms of a business, then whatever is being given, that's a clubbed form. In the balance sheet, now you will see everything is in the clubbed form. Working notes of the same has to be stated properly. Otherwise, we will face major problems that where is it coming from? Where are the totals coming from? So you have to give proper information. Proper information means accounting for full disclosure. This is also something which you'll find in AS1 as well. This is a particular concept as well as an accounting standard. Okay, next question. Which of the following accounting standards helps in better understanding of the financial statements, everyone? AS1, AS3, AS6, AS9. Better understanding of financial statements, disclosure of accounting policies, then cash flow statements, accounting for fixed assets, or revenue recognition. What would be the answer, everyone? We've just talked about it. When we talk about AS1, it states every time you're giving the information, do give the entire information completely. Whatever the working notes that you're preparing, all the, for example, if we take a loan now, then there is a file which is prepared in the organization itself, right? Abhi to everything has become print in the form of digitization, so things have changed. But over the period of time, this is what I'd seen back when both the things were done in mixed form. So then people, what used to do is hypothecation letter, the letter which was received, that this is where the acknowledgement of the loan is made, the terms and conditions of the loan are stated in it. With that letter, they used to put the bank statements of the loan along with it, because that becomes the loan file, which could be counter checked by the auditor, whosoever is coming, a CA, internal auditor is coming, or external auditor is coming. Because when you are supposed to pay, then if you are a company and people are investing in you, then they are obviously interested in knowing what is exactly happening. When you're trying to find what is exactly trying to happen or what is exactly happening, that part is covered under this. Okay? So in this case, the basic reason is that you have to give all the information whenever it is being asked by you. So then reconciliation has to be done as well. If I say in my bank account, I have to pay a loan of say 5 lakh, 5 lakh is left, then the proof of that 5 lakh should also be visible. With this particular scenario, the answer comes out to be AS1. Okay, this is complete disclosure. You have to keep all those things. Now things have changed a little bit, but yes, now these files are also kept in the electronic form, and people are still maintaining the other forms as well. It depends upon organization to organization, but it is always better to do such a thing. Okay. Next question, everyone. Sequence of the following activities in the process of accounting: journalizing the transaction in the ledger accounts, recording the business transaction in the books of entry, preparing of annual financial statements, preparation of trial balance, or deriving the meaningful inferences of the business decisions. Choose the correct option from the options which are given below. A, B, C, D, E, or A, B, D, E, C, D, C, E, B, A, and B, A, D, C, E. What's the answer, everyone? Okay, I hope it's visible right now. Visible now, clearly? Go ahead and think of the answer. What's going to be the answer, everyone? The answer in this case is going to be, first of all, you record the business. You have to, first of all, identify. Once you've identified, then you record. That's the next point that we do. Identify, then we record, then we journalize. Then the next point is preparation of the trial balance. This is the first point. You identify, then you record, then you do the journal, then you make it to the ledger. Ledger is not given here, then you prepare the trial balance. So this is the third point. Then after this, you are looking forward towards preparation of the financial statements. When the financial statements are completely understood, then you find conclusions out of it. So in this case, the correct answer is B, A, D, C, E. That is B, A, D, C, E. The sequence the following in the capital budgeting process: cash flow estimation, identify discounting rate, project selection decision, determination of NPV. Choose the correct answer from the options given below. A, B, C, D, A, B, D, C, D, A, B, C, or B, A, D, C, everyone. Again, this is a point of capital budgeting. Okay, this is a point of module C, everyone. But go ahead and try it out. If you have done this part with me in the YouTube sessions, or if you have done it on your own, then go ahead and try it out. Acha. First of all, we have a cash flow estimation. What happens and what doesn't happen. This is cash. You have to find out the cash flows. Acha, everyone, over the period of time, if I receive good amount of money, it's good now. If I have received 10 lakh, 20 lakh, 30 lakh, over the period of time, the cash flow is increasing. Then the next point that happens is discounting factor. Then you have to choose a discounting factor. The answer is actually A and then B. Then decision is taken after the NPV. Basically, what happens is you have your cash flows defined. Okay, 1, 2, 3, 4, for all those 4 years, your cash flows would be defined. Once the cash flows are defined, then next thing that will happen is then you choose the discounting factor. Then the next one is determination of the net present value. You will find out your net present value by multiplying these with the discount factor. Once you are done with this, then you have your net present value. The moment you find your net present value, this is where, if this turns out to be positive, as whatever your NPV would be, from this remove your initial investment. What you get is your, this is actually cash flows. This is what we called discounted cash flows. Once you have found this, then you use discounted cash flows, remove initial investment out of it, and then what you're left is net present value. That is called NPV. It is called A, B, D, C. Next point, according to which of the following categories of activities a cash flow statement should be prepared as per AS3? Cash flow from operating, cash flow from investing, cash flow from financing, cash flow from production, and cash flow from selling activities. The codes are given below, everyone. This is a super easy question. This particular chapter is an individual chapter in module B, and at the same time, this particular chapter is very, very important in terms of the new additions that have been made in the book. So what would be the answer, everyone? Answer here would be 1, 2, and 3. There are three important activities of the cash flow statement. What are the most important activities of the cash flow statement, everyone? First is in terms of cash flow statement, we have operating activities, then we have investing activities, and the last one we have is financing activities. These are the three major activities. Operating activities are those activities which talks about the regular working of the business. Then we have investing activities, which talks about the money that you receive or you lose because you are investing your money in some long term assets. Then financing activity talks about from where you are getting the capital for the business or where you are investing the money. This is related to your long term borrowings. Done, everyone? That's the next point. So let's move on towards the next point. Capital in the business is treated as a liability due to dual aspect concept, business entity concept, going concern, or accrual concept. What do you mean by the term capital, everyone? When we are trying to define the capital of the organization, capital is basically stated as something which is the owner's funds. Okay. Being the owner, I invested a certain amount of money, which is called my owner fund. When we talk about the owner's fund, whatever money he is giving to the business, business is answerable for that fund because the person could have invested the same money somewhere else as well, no? But he didn't. He kept this money into the business itself. So technically, this is owner's fund. So if this same money he takes out of the business, then it would be called drawings. Though this is his money, he can do whatever he wants to, but then he becomes answerable to the business. So this is actually called business entity concept. That business, the business man, they are two different persons. Okay? One is business and the second is businessman or proprietor. They're two different persons. Given below are two statements, one labeled as assertion, the second one is reasoning. Assertion can be defined as sinking fund is charged against profit and loss account. Reason, sinking fund is created for repayment of long-term liability. In context of the above statement, which one of the following is correct? A is correct, R is wrong. Both A and R are correct. A and R, A is wrong, but R is correct. Or A, both A and R are wrong. What's the answer for this question, everyone? Let me just show you this part again. What's the answer for this question, everyone? What would be the answer according to you? We're talking about sinking fund, and then we're talking about sinking fund is what? This is the money which we keep aside for the sake of it that we are having. We want to keep the money aside for the future. This is actually a fund that we create that every single year, whatever asset we have, the value of that asset is going to decline. So if it is going to decline over the period of time, it is a troublesome situation for us, isn't it? So at the end, will we take out a lot of money in one go? It is a troublesome situation. Ki, arey, in one go, if I have to take a huge amount of money, why should I do that? Can I just spread out the money over the period of time? Isn't it better? That is a better option. So in this case, what should we do? So in this case, the best thing to do is that we have sorry, I think I was talking about the question first now. So then we create a sinking fund. This is a fund which is created specifically to purchase a certain asset after a certain period of time. From the sinking fund, we made sinking fund investments. We invest this money into the market, we receive interest, and we by the end of the life of that asset, we will sell off this investment and we will also receive the profit and loss of this particular investment as well. So sinking fund is created by for repayment of long-term liability. That is actually correct. So in this case, both the assertion and the reasoning, both of these things are absolutely correct. There is nothing wrong in it. Acha, here comes a question related to the depreciation, everyone. On 1st April 2013, Kanu bought machinery worth rupees 80,000. This person has bought a machinery worth rupees 80,000 on 1st of April 2013. Then bought a machinery worth rupees 80,000 on 1st of July 2015. Machinery was sold for 40,000. Technically, it was used throughout the year of 1st April 2013 to 31st of March 2014. Then from 1st of April 2014 to 31st March 2015, it is used, and then in July 2015, matlab from 1st of April 2015 to 1st of July 2015. What did we do? 80,000 at the rate of 10%. That is rupees 8,000. This is the depreciation for the first year, because they said the depreciation is charged at the rate of 10% and the year is from 1st April till in this case 31st March is the last date. Now technically they have taken the financial year itself as their chosen year. It is 88,000 in the first year, and then in the second year it is also 8,000, but in the last year, because under original cost method, both the particular under original cost method, now what they say is that is called straight line method also. This is also known as straight line method. Under straight line method or original cost method, what are we doing? In this case, what are we doing exactly? We are trying to find out the values in such a way that other than the depreciation is charged directly on machinery. That is on the first day on which it is bought. So in this case, it is 8,000 depreciation for the first year, 8,000 for the complete second year. In the third year, it is used for 3 months. This is April, May, and June. From 1st of July, things change. This is for 3 months out of 12. This comes out to be 2,000 rupees. This is the depreciation till date. And what they want, the value of the machinery at the end of the second year. So that means first year we had 72,000 left, because 80,000 minus 72. From 72, remove 8. What is left is 64. The answer is 64,000. Done, everyone? Now they are talking about what is the loss on sale if we are selling it at 40,000. Acha, everyone, the value of this machinery was 80,000. In the first year, the depreciation was 8,000, left with 72,000. Remove the next 8, you're left with 64,000. Once your next 64,000 is also sorted, then in the last year, just remove 2,000 more. Then what are we left with? We are at a situation where the cost left is 62,000, even after absorbing all the depreciation till date. Matlab, the value of the goods is value of this machinery is 62,000 right now, and 40,000 is something that we are fetching out of it. So technically 22,000 is our dead loss. Done. There is a loss of 22,000 just because you didn't see that what is the book value. It was way above than the amount that we were taking up. Done now? Done? This is the answer. Chaliye then. Let's move on to what's the next question. The answer is 22,000. So these kind of questions can be a part of case studies, everyone. Okay? This is a part of case study. Such numerical normally comes in the examination in the form of case study and it can come for 5 to 6 marks. Okay? Acha, this is a particular topic related to the errors which happen in the business, everyone. There are different types of errors that occur. This is something that you will find in trial balance and rectification of error chapter. In this case, what are we given? Errors disclosed by trial balance or errors which are not disclosed. The ones which are disclosed by the trial balance are partial omission. We wrote but half. Error of casting, if there was an error of totaling. Carry forward means something you wrote this year, but is it being carried forward towards the next year or not? Errors of posting in the wrong side of the wrong amount. When you put some debit thing into the credit side or credit side thing onto the debit side. Then errors of posting to correct account, but with the wrong amount. So technically, I have written it where it was supposed to be, but I wrote the wrong amount. Then double posting, one particular journal entry can be written twice. है ना? Then comes errors not disclosed by the trial balance. These are certain errors which the trial balance fails to examine. That is complete omission. You forgot about it to record completely. There is no debit side, there is no credit side. Errors of recording. We record the things, you know. Then errors of principal. I'm sorry, then is error of the posting to wrong account on the right side. Matlab you put into the wrong account, but we are putting on the right side. The name of the account changed somehow. This can also happen. And then the last one is the compensating errors. This is actually the underdog. In terms of the compensating errors are those errors where on the debit side we have the same error and in the credit side we have the same error. And matlab there is a difference of a certain amount, and then you will be able to find out that the compensating errors are those errors where the same error is on the debit side and same error on the credit side. So the balance sheet or the trial balance will still match, yet a part of the entries would be still missing. Then this is the list of errors. Then chaliye then let's move on towards the next question. Here comes the next question, everyone. This is related to the Ind AS. Which of the following statements is correct about deferred tax asset or liability as per Ind AS, everyone? Deferred tax assets should be classified as current assets. Deferred tax liabilities should be classified as current liabilities, or deferred tax assets should not be written as current assets, or deferred tax liabilities should be contingent liabilities. They are not. Okay, this is something that you postpone, but they are not uncertain in nature at all. So deferred tax are basically something which is non-current. Okay, they should not be classified under the era of current assets. There is no problem in classifying them, but you should not classify it on the current side. Done? Here comes the next point, everyone. Which one of the following is not inventory valuation method? LIFO, FIFO, weighted average, or EOQ? In this case, what's the correct answer? First in, first out? This is actually called first in, whatever stock came first, and then first out. Then this is called FIFO. In terms of LIFO, we have last in, first out. Okay. Then we have weighted average, and the last one is economic order quantity. How much quantity I should order at one point of time so that my capital cost, transportation cost, every single cost is utilized and is minimum. So in this case, the method which is not a part of this is LIFO. LIFO is not recommended at all, everyone. This specific method is specifically not referred. Next question. Just give me a moment, please. Till then, go ahead and try this question. It's an important one. Ji, what's the answer for this question, everyone? Which government body revised the standard in 2016 for companies following companies accounting standards rules 2006? That is Ministry of Finance. Then we have Ministry of Corporate Affairs or the Government of India. And then is the Securities Exchange Board of India or ICAI, Institute of Chartered Accountants of India. When we talk about the government bodies, it is the Ministry of Corporate Affairs, MCA. MCA is the organization which took over this part. Earlier, ICA was doing it on their own. They created Ind AS, which are prepared again by ICI. The preparation of it is again done by ICI only. But the organization, that is the Ministry of Corporate Affairs. The Ministry of Corporate Affairs issues it. Even if you go and check it out right away, na, you will find that the accounting standards are issued by MCA, Ministry of Corporate Affairs. When can enterprise recognize a contingent liability? What do you mean by contingent liability? Contingent means something which is uncertain. You know, it is not certain in nature, it is uncertain. When do we recognize it? Always, only when it is probable that a liability will arise, only when the liability is certain or contingent liabilities cannot be recognized. In terms of the contingent liabilities, these are those liabilities we might or we might not have to pay. So when there is an uncertainty, how can I put it in the balance sheet and then take it out of the balance sheet? There is no option. When such an option is not there, what will we do? Contingent liabilities cannot be recognized at all. They are not. They are actually shown in the footnote of the balance sheet, be it in the company account or in the banking company even. The situation is same. We do not recognize it anywhere else, but we put it in the balance sheet itself. Footnote rather. Footnote means it is not a part of the balance sheet, not shown in the balance sheet at all. Next point. Which one of the following statements is correct about value accounting? This is something that you will find in the first chapter itself. It is the same as cost accounting. Value accounting is used to evaluate and capture individual contributions in making of a product. It takes into account only the tangible contributions in making the product, or it takes into account only the intangible contributions in making the product. What's the answer, everyone? Acha, just give me a moment. Visible now? Regarding value accounting, what do you mean by value accounting, everyone? I find that when we talk about the value accounting is basically how much value you are putting it. You know? Isn't this the point, everyone? This is the value that you are putting in into something, right? So when we are putting in something in terms of the values, that is the contributions. When we talk about the monetary contributions, for example, if I give n number of hours into a particular work, this contribution will be converted into per hour contribution, and that per hour contribution would be specified in the books of accounts. That is how we recognize all these things, isn't it? So in this case, in terms of value of accounting, it is recording the individual contributions to making the product. The answer is B. Next, what is the key difference between bills of exchange and promissory note? Bills of exchange is made by debtor, while promissory note is made by creditor. Bills of exchange is an unconditional promise to pay, while promissory note is an unconditional order to pay. Bills of exchange has two parties, promissory note has three parties. Bills of exchange requires acceptance by the debtor, while promissory note does not. Pata hai, one of the major differences between the two can be said that bills of exchange is actually an order. An order that you give to the other party is, see, you have to pay this much amount of money by this much amount of time. We are putting too much pressure on the other party. That it's an unconditional order. There is no condition. If you fulfill this condition only, then this will happen. No. That is bills of exchange. Then we have something called promissory note. What do you mean by promissory note, everyone? Where I promise to pay certain amount of money by certain amount of time. Okay? Done, everyone? So in this case, what's going to be the answer? There's only one point where both these things are written. The answer is bills of exchange is an unconditional promise to pay, while promissory note is an unconditional order to pay. The major difference is that bills of exchange is basically a situation where we are um, giving an order. In this case, what happens is the wordings of a bills of exchange. I order you to pay certain amount of money by certain amount of time. And in this case, the person who's writing is writing for the person who's going to pay. So both of them will be signing. There would be a stamping, and this is where the bills of exchange is completed. Then, while when we talk about promissory note, in this case, I promise to pay certain amount of money by certain amount of time. All these things are given. So, what's the major difference? This is an order, and this is a promise. The wordings makes it different, and here you can sue the other party. The legal benefit of the bills of exchange is more than that of promissory note. Promissory note are a little weaker than that of the bills of exchange. Okay, here comes the next question, everyone. The question says that what is the essential feature of the check accounting to Section 6 of the Negotiable Instrument Act? Uh, check, it must be drawn by the creditor, it must be drawn by the debtor, it must be payable to the bearer or to the order or payable on demand, or it must be having a fixed future date. A check can be bearer, it can be related to the area of demand. So in this case, when we look at the answer, there is nothing called debtor and creditor. We ask our bank to pay us or the person we choose. Sometimes we take self and we take out the money from there as well. Now, it must be payable to the bearer or to the order or payable on demand. The answer is C, everyone. Okay. And everyone, let's look at the next question. Which one of the following is true? An insolvent is a person from whom some portion of the debt is recoverable. Drawer drags the drawee to the court in case of dishonor of the accommodation bill. When the due date of the bill falls on the public holiday, it is payable on the earlier working day. Drawee is a person to whom the bill is endorsed. Nay, there are three parties. One is drawer, one is drawee, and one is pay. Drawer basically issues the bill. I order you to pay to the drawee. And the drawer can either choose that the payment should come to him or it can come to the payee. Any of the parties. There is no specific party to whom it should be given. So, in this case, the answer is when the due date of a bill falls on a public holiday, it is payable on a earlier working day. Why is this answer? This part is eliminated. An insolvent is a person from whom some portion of the debt is recoverable. Actually, we say the insolvent is person from whom who is unable to pay the entire debt. Sometimes you cannot recover even a single penny. So this particular point is partially true. In some certain situations, it can be true. Drawer drags the drawee to the court in case of dishonor of accommodation bill. Actually, accommodation bills are a different kind of bills altogether. These bills are basically an arrangement between the drawer and the drawee. So this doesn't happen in case of accommodation bills as well. They're just helping each other. But yes, this happens when the due date of the bill falls on a public holiday. It is payable on the earlier working day. It says whatever your due date is. Normally, whatever your due date is, you have to add 3 more days, which are called the grace period. For example, I issued a bill for 1 month on 1st of April. It doesn't matter whether it is 30 days or 31. We're talking about month. I issued something on 1st April 2023. Now, the month is complete on 30th of April. So then add 3 more days. So 30th April, the month is over. है ना? In this case, what will we do? Actually, we do not include the first day. So in this case, it turns out to be 1st of May. because this first date is not included. The day on which you issue the bill, the day following it is included. That is 1st May 2023 becomes the day on which the month is completing. Then we add 3 more days, making it 4th of May as the due date. So this becomes the answer. Which of the following is an example of a debit voucher? Pay-in slip for deposit, application for term deposit, credit voucher for locker charges, challan for deposit of taxes. What would be the answer? Achha, I hope this particular portion was clear. Huh? This is called the grace period. This period is called the grace period. Done? Next question. Debit voucher. In terms of vouchers, we have two types, debit and credit. And then we have another type as well, composite, which is basically the mix of both. And we include all these things. Now, what would be the answer, everyone? What's the answer? When we talk about the which of the following is a debit voucher, pay-in slip for deposit, debit means expense, credit means income. The same thing is followed here. Oh, I hope the particular points are visible now. Which of the following is an example of debit voucher? Debit voucher. Expense based. That means the in this case the debit voucher is basically the pay-in slip. Okay? Because application for term deposit is not a voucher portion there. Credit voucher for locker it is saying credit. Challan for deposit of taxes is not the point here. That is also credit voucher. So pay-in slip is the debit voucher. Done? Okay. Then let's move on to what's the next point. What is the key difference between the debit and the credit vouchers? Debit vouchers are related to the customer deposits, while credit vouchers are related to the withdrawals. Debit vouchers are related to the transactions, related to the increasing the bank's liabilities, while credit vouchers related to the area of transactions, increasing the bank assets. Debit vouchers are related to the customer payments, while credit vouchers are related to the customer receipts. Last, debit vouchers are related to the transactions increasing in the bank's assets, while credit vouchers are related to the transactions increasing the bank's liabilities. Now, when we talk about the debit vouchers, I told you that debit vouchers are more or less related to the area of expenses and the incomes of whatever money they're receiving, right? That goes to the credit side. So, what would be the answer to this question? The answer to this question would be the debit vouchers are related to the transactions increasing the bank's liabilities, while the credit vouchers are related to the transactions increasing the bank's assets. Okay, how often is a trial balance of a personal ledger typically prepared? Trial balance monthly, every 2 weeks, quarterly, or annually? This is a question based upon our book itself, everyone. What would be the answer? The answer is every 2 weeks. Okay? The answer is every 2 weeks. Done? Chaliye. All sorted with this? Now let's move on towards the next question. Banks follow the accounting procedure for voucher posting under which the vouchers are first posted in the general ledger and then individual accounts of the sub-C ledgers. Straight away posted to the individual accounts of the sub-C ledgers. First posted in the day book and then to the accounts of subsidiary ledgers. And then comes none of the above. What would be the answer, everyone? Answer to this question is going to be simple. The answer is banks follow an accounting procedure. Yes, they do follow. When they are preparing it, normally things go directly to the individual accounts. Obviously, if something relates to my account, first of all, it has to be updated in my account and then it will go to the different ledgers because it is fine. This is what we can do. But if it is not recorded in my account, then it's a major problem. If it is recorded in my account first, this is where it is supposed to be. Rest everywhere it will go. But if it is there everywhere, but instead of my account, it goes into your account, then what will happen? It's a withdrawal that will affect your organization, right? So this is definitely not good, isn't it? Now, what has undergone the transformation with the introduction of computerization in banks, according to computerization in the bank, computerization CBS, core banking solutions, entering the banks. Earlier, things weren't that way. Now it has changed altogether. Banks are basically doing a lot of things on the basis of the working that they're doing, isn't it? What has undergone the transformation with the introduction of the computerization? The major changes is marketing strategies, front office, reconciliation process, or loan origination. The major change that you will find is in the reconciliation process. Now everything is computerized. You don't have to do anything. The computer does all the work, right? This is the work which is done by the computer itself. So there we do not have a lot to worry about. Okay, so if you haven't subscribed to our channel yet, then please do the needful as early as possible. Uh, Acha, before I actually proceed with the further level of questions, a good number of questions are still left. I would like to show you in terms of our website where to go when you are preparing. Okay, so let me just show you that part as well. As you already know, at this point of time, our sale is going on. Okay, it is very important that you enroll yourself in our courses in the period of sales itself, because now at this point of time what happens is you can get the particular courses at a price which is lower, you know. So why don't we buy it right away, especially if you're preparing for JIB right now and you have to pay and you are not able to study on your own. Sometimes this happens. Self study is not possible. You want to go ahead with some classes or something. So if we are thinking that we have to do something about it, then what do we do about it? Learning today, leading tomorrow, then best part is learn today. So that by the time the examination is there, at least you won't be having any problem. Go on to the area of the JIB and CIB. When you have entered the area of JIB, CIB, this is where JIB May 2024 is there. On our Mahapack, you can see double validity. What do you mean by double validity? That means if you buy it for 6 months, you get for 12. So entire JIB Mahapack is available for 12 months. It includes current batches, previous batches, bilingual, English medium, test series, ebooks, marathons, mini marathons, doubt sessions, practice papers, whatnot is included in it. All these features that I've said, they are a part of it. And then what will you have to do? Click on the area of buy now. Use the code buy. Use the code buy 541. As soon as you will apply it, you can see it will give you 80% discount if you are using the app. 79 is there on the website, 1% on app. This will give you 6298.95 for our JIB course. Isn't this price a good price? Because you get it for 1 year, roughly 500 rupees per month. That is what comes out to this point. And then you get the entire course of the JIB in this area. You don't have to pay a single penny. You get the MCQ classes, you get all the classes regarding this examination in this particular area itself. Then If you're thinking ki nahi, I don't want the entire JIB pack, you can also take up our Victory JIB batch. This is only English medium. The price difference is there, but there's a major difference. Revision batches, every other batch, the test series, the detailed format, everything that we talk about, all the additional features are there in the uh, Mahapack. Click on the area of Y541, apply it everyone. You will see in this case, you're getting the validity of 6 months for 4199.79. The validity is for 6 months. If you buy the Mahapack, you get it for 12 months, and that too for 6,000 something. You know, so in this case, what the only difference is, you get only the English medium, you have test series and ebooks. Rest every other feature you will find in that particular batch. So what are we waiting for, everyone? Why don't we enroll ourselves in the Mahapacks and utilize this particular opportunity for our benefit? You know? Chaliye. Now coming back to the topic. If you are thinking to enroll yourself, kindly go ahead and use the code Y541 to get 80% discount, 79% on the website, and 1% on the additional coins. So check it out. Okay, so there it is. This is the place where we were, right? Now, here comes the next question. Visible, everyone? What would be the answer, everyone? What is the primary emphasis of computer aided audit techniques, CAATs, in audit processes? Arithmetical accuracy, true and fair presentation, regulatory compliance, and detection and prevention of errors and frauds. What's going to be the answer, everyone? What's going to be the answer to this question? Okay, let's look at the specific answer there. When we talk about the computer aided audit techniques, arithmetical accuracy is not the point. Arithmetical accuracy is definitely there in terms of computers. There's no doubt about it, isn't it? So, what is that particular thing that is important? That is true and fair presentation. This true and fair presentation is super important when it comes to the working of an organization. Because till the time you don't find a true and fair presentation, how will the organizations work? Because if we are preparing the books of accounts and then we find out that there are some issues in the particular presentation itself, then there would be questions raised on this area. You know, isn't it right, everyone? Chali. True and fair presentation done. Now let's look out for the next question. What is the role of the bank audit in ensuring the health and stability of the banking sector? Reviewing the customers' services, ensuring compliance with industry standards and norms, promoting intense competition, facilitating rapid changes in the business conditions. Bank audit is ensuring the health and stability of the banking sector. Why is it helping and to what extent it is helping, everyone? What would be the answer? The answer to this question, the role of bank audit. The bank audit is very important because we really need to see whether we are working properly or not. In this case, we are actually ensuring whether we are following the industry standards and norms or not. If we are not, we have to find out and we have to correct it, right? What is the significance of risk based internal audit, RBI, introduced by RBI in the banking sector, everyone? What would be the answer to this? Concentrating on transaction testing, focusing on the accuracy and reliability of records, or evaluating risk management procedure and internal control systems. And the last one is emphasizing arithmetical accuracy. It can just not be the point. Always remember, है ना? This can never be the point. So in this case, what's going to be the answer? Concentrating on the testing? No. It is again relating to the area of evaluating risk management procedures and internal control, because we want to maintain the true and fair view of the business. To maintain that true and fair view, we really need to know what exactly is happening in the business. ठीक है ना? Done? चलिए. Let's move on and talk about the next question. Purchase of fixed assets on credit results in. I purchased an asset, everyone, and that too on credit. Matlab, I haven't paid even a single penny. So if I haven't paid even a single penny, then what are we going to do? If I haven't paid a single penny, then I've just got an asset. You know, I've just got an asset. If I've just got an asset, then what will we do? In this case, I've got a fixed asset and I have a vendor to pay. Fixed asset and a vendor. Change in total assets only, change in both assets and liabilities, change in total liabilities only, change in liabilities, but total liabilities remain the same. Purchase of fixed assets. We have got an asset and we have got an vendor. This is increase in an asset and this is increase in a liability. The answer is change in both assets and liabilities. The repayment of loan results in change in both assets and liabilities, change in total assets only, change in total liabilities only, change in liabilities, but total liabilities remains the same. Repayment of loan. If we are making a payment for the loan, normally the loan repayment is loan to cash. Isn't it? If we are making the payment, the liability is decreasing and our cash is also decreasing. So in this case, both the sides are being affected. Which sides? Change in both the assets and the liabilities. The answer is A. Done? What type of adjusting entry is made for expenses incurred but not yet paid? Acha, we are looking forward towards expenses incurred. Matlab, for example, acha, they have taken up the salary points na in this case. Let's see. We have to pay salary. So that means salary expense for the particular year is accrued. But that amount is not out of our hands. That is salary to salary payable. Instead of writing cash here, because there is no movement of cash now, we just are paying the salary. So debit to the charges account and credit to the salary payable. Debit to the salary payable account, credit to the charges. Debit to the salary account, credit to the charges. Debit to the charges account and credit to the salary account. What's the answer to this question? The answer is debit to the charges account and credit to the salary payable. This is actually salary expense to salary payable. Basically, if we would have paid, if we pay something, that is salary to cash, and if we do not pay, then the liability is created. है ना? So that would be considered here. The answer is A. What is the adjusting entry for interest income that has accrued but not yet received? interest income, na? That means this is an interest accrued to interest. If I would have received the income, it would have been cash to interest received. This is my income and materialized, received in cash. If it is not, then we write it as interest account, interest accrued, which is an asset that soon I will receive the money from someone. Debit the interest receivable to interest income. This might be the correct one. Interest income to interest receivable. No, this is wrong. Interest payable, they're talking about income. So that means the payable account should not be there at all. So both these points, point number C and point number D, has to be completely eliminated. The answer is debit to interest income account and credit to the interest receivable account. If an income has been received but not yet accrued, how is it accounted for? Debit to income received account and credit to the advance income received account. Debited to the advance income received account and credited to the advanced income received account. Ignored in the process of accounting process, or debited to the income received account and credited to the income payable account. The income has been received. Okay, someone has given me money before time, isn't it? So normally the journal entry is cash to income received in advance. Yeah? And normally, if we didn't record it directly in this, our we have recorded it in income, so we have to reduce our income. The other alternative entry can be income to income received in advance. In the income, we have considered this advances, which should not be, and the this part should be recorded as a liability. So look at the points. What would be the answer? Payable account is definitely not there. This is not a payable account situation. Ignored wala situation is definitely not there. The answer is B. Advance income received account and credited to the income received account. The answer has to be the opposite one. Income to income received in advance. This is to be the answer. The point is not correct. The answer is that only. It has been written in the opposite manner. There was a violation of the laws of accounting there. What is the primary distinction between partnership and limited company in terms of ownership and management? In partnership, there is a separation of ownership and management. In a company, they rest with partners. In partnership, ownership and management rests with partners, and there is a separation. Ownership and management are the same in both partnership and company structure. There is no distinction. There is a major distinction between the two. In the partnership, the partners are itself managing the entire working, isn't it? Those partners have to. If they won't, then who will, right? While in a company, the shareholders are different and the people who are taking care of it are totally different. So in this case, what's going to be the answer? Partnership and limited company in terms of ownership, management, everyone. What would be the answer? The ownership is different in terms of LLPs and the companies. Partnership, ownership and management rest with partners. Partners are taking care of everything in the business there. They maintain the business, they work on the business, They organize the business, while in a company there is a separation. Separation in what sense? That the business and the businessman are working together, but the shareholders are the true owners, while the company itself isn't about that. You know, in context of in a company, the owner and the ownership is two different scenarios, while in the other area they are together. What would be the answer in this case, everyone? In context of preference shares, what does cumulative means? Preference shares are divided into various types, and we're talking about this point. Dividends do not accumulate. Dividends are accumulated and paid in subsequent years when there are profits. Dividends are paid in a current year and do not accumulate. Dividends are forfeited if not claimed in the specific period. Cumulative means to accumulate or to keep them together. है ना? So dividends do not accumulate, they do. So this is wrong. So in this case, what happens is if in the first year we have D1, second year D2, third year D3, fourth year D4, D1, D2 paid, D3 could not be paid because the company just could not. They had insufficiency of profit. So they said in the next year, what will we do? We will give D3 plus D4 together. This is the assurance of the company that in case we are not able to pay you in one particular year, next year we'll pay it together. And this particular right is only for the cumulative shares. No other shares gets this right. Okay, only they get this right. Then Kelly. Then let's move on towards the next question. Dividends are accumulated and subsequent in the are paid in the subsequent when there are profits. Again, the same point comes up. We have just showed you this particular part, so it would be covered accordingly. Now, what would be the next question, everyone? Which type of the share capital is mentioned in the MOA, Memorandum of Association, and represents the maximum limit on up to which the company can raise capital? It is the maximum limit. Everybody, what's going to be the answer? Issued capital, subscribed capital, called up or authorized. We're talking about maximum limit. Maximum means the maximum authority we would have got. That is called authorized capital, also called registered, also called registered capital, also called nominal capital of the business. Okay, we take all these three together. That is D itself. The answer is authorized capital. What does called up capital represent, everyone? The called up capital, part of issued capital actually subscribed by the public, maximum limit up to which the company can raise capital, amount company has asked shareholders to pay, or capital mentioned in the MOA. What would be the answer? The answer, called up capital. Called up means the amount that we are calling people to pay now. This is the amount where people have taken up the shares and then we are asking them ki bhai your amount is due. We are asking them that this particular amount is due from your side. So kindly pay this amount. So that's what we consider in this area, everyone. Okay? Okay. Now let's move on towards the next point. Amount the company has asked the shareholders to pay. We are asking the shareholders to pay, na? That is called up. Called up means we are calling people to pay. Ki, sir, your amount is due. Kindly pay the amount. Then what's the next point? What should be presented within equity according to Ind AS 1? Marketing, investments, non-controlling interests, employee salaries, or administrative expenses. See, admin expenses and everything, this is already noted in the books of accounts. There's no point that we'll be worried about any of these things. What will we be worried about is basically when we are talking about the books of accounts, and we would want that the equity should know the whatever is there in the business, everything has to be said clearly, you know. So when we talk about this area, it includes the non-controlling interest. If you have any interest in any other company, now you have to be very transparent and clear about that particular thing that is happening. That is covered in this area. Okay, so the answer to this question is non-controlling interest. Done. Which standard is related to the area of non-current asset held for sale and discontinued operations according to Ind AS 1, Ind AS 12, Ind AS 105, then what is 105, or Ind AS 41 or 16? Everybody, if you like this particular session, please click on the like button as well and share this session among your peers, please. Your little effort can definitely motivate us further to keep on working harder so that you get the benefit out of it. So please let me know the answer of the same. What would be the answer, everyone? The answer is Ind AS 105. Okay? The answer is Ind AS 105. Done? Next point. When presenting the current and non-current assets separately, what is the classification of deferred tax asset according to the standard? As current liabilities, as non-current assets, deferred tax assets cannot be classified separately as both current and non-current assets or liabilities. Non-current and current separately. If we don't do that, how will we identify things? What is the classification of deferred tax assets according to the standard? Actually, this is a mix of 2 points, na? When presenting current and non-current assets separately. Remember, deferred tax asset is not current. It just cannot be current. It is always non-current in nature, number one. Secondly, when we talk about the non-current assets or liabilities, then there are always non-current assets and non-current liabilities. And in a particular case, always remember, either you can have in one particular year is a deferred tax asset or a deferred tax liability. You just cannot have both. You can either have one or the other one. It's either or. Okay? As non-current assets. Okay, here comes the next question, everyone. I hope it's visible. Regarding shares reserved for issue under options and contracts, what information should be disclosed? What's the information that should be disclosed to everyone? Everybody? What is that specific information that is required to be disclosed? Disclose only the terms and opinions in terms of regarding shares reserved for issue under options and contracts. What information should be disclosed? Disclose only the terms of options, disclose terms and amount of share reserved. Disclose amounts only, or no disclosure is required for shares reserved. So whatever the scenario is, always have to disclosure is always required in one or the other way, and it is always better. Full disclosure principle says give the complete information. Why to give half-hearted information? Half-hearted information is scary. The complete information is good. So in this case, what's going to be the answer? The answer in this question is full disclosure. Disclose terms and amounts of the shares reserved under options and contracts. Which one of the following entities is required to present consolidated financial statements as per Ind AS 110? But that this is the area where you get confused in the examination. Not only you, anybody can get confused. The problem is these AS are hard to learn, isn't it? So we really have to sit down and study these things very in a very detailed format. If you don't do this, then we'll face a problem in the examination. So we need to remember some sequences. If you can remember only a few serial numbers, even you never know those kind of things are also coming in the examination. So that's an important area to be covered there. All the companies having more than one division, all government companies, entities that control one or more entities, or all the companies are required to present consolidated financial statements in terms of 110 Ind AS. What's going to be the answer, everyone? The answer is entity controls more than one or more entities. That means it is a holding company. You know, a holding company has the right to uh, has the decision making power of more than one organization, right? Here comes the next question. Give me a moment. Go ahead and look at the question, please. An example of the cash flow statement for financing activity is what's an example of the financing activities? Cash proceeds from issuing debentures, cash payments for acquiring property, plant, and equipment. Acha, financing activity means what? If these are very difficult questions at times because classification becomes such a pain. So, how do we do it? Financing activities are those activities through which I can finance my business, isn't it? So, cash proceeds for issuing debentures, cash payments. Financing activity actually is the first one only. Debentures are debts, the finance that we are taking from people. So the answer is the cash proceeds from issuing debentures. क्योंकि property, plant and equipment is investing. Cash receipts from sale of equity uh, instruments. And last is cash payments for supplier of goods. This is operating. वैसे actually ना, this is a little dicey point. Why? The cash receipts from sale of equity instruments. This means this is somewhat my investment. That I would have bought some equity shares of some other company and then I would have sold it recently. That's an assumption because cash receipts from sales of equity instruments sounds like that only. So the point which is clearly visible is debentures. When we issue debentures, that means we are getting loan. Which of the following is an example of cash flow from investing activities? Cash proceeds from repayment of advances, cash payments from acquiring property, plant, and equipment, cash payments from issuing shares, cash payment from salary and wages. Investing activities, everyone. Investing means I am purchasing or selling investment. Investment, cash proceeds from the repayment of advances. This is basically an operating activity. This is operating. Cash proceeds from acquiring property and plant and equipments. Payments, na, this is outflow of cash. This is investing. Outflow because I'm paying to someone. Cash payment for issue of shares. This is financing. Though I've got the answer, but I'm just telling you about all of these. Cash payments from salaries and wages. Salaries and wages can be converted into operating again. So the answer to this question is B. And this is outflow, everyone. Acha, inflow and outflow is basically, inflow means getting money. Whenever you will find an inflow means plus and outflow means minus. Okay? That's the specific rule of cash flows. Done, everyone? What do cash outflows from investing activities represent? Expenditure made for resources intended to generate future income, and then is investment in fixed assets or financial assets, decrease in working capital or cash payments for acquiring equity instruments. Now, the next point. What do cash outflows for investing activities represent? Outflows means obviously we are losing cash now, but why would we lose cash if we are not doing anything out of it? That is expenditures made for resources intended to generate future income. We are purchasing fixed assets. Fixed assets means both tangible, the ones which can be touched, and which cannot be intangible. Both are covered in this, everyone. There is no point that we'll cover one and we'll not cover the other one. The answer is A. Okay? Done, everyone? Okay. Next question. Interest earned by the bank is shown under which schedule of P&L? 13, 14, 15, 16. This is actually an IBF book question. What's going to be the answer, everyone? Interest earned by the bank is shown under the schedule of P&L. 13, 14, 15 or 16. Acha, interest earned is the primary source of income for a business. You know? This is for a bank, this is the primary source. This is where the banks are making money. The banks are making money using the schedule number 13. This is the primary source of income from the bank. This is additional other incomes that they are earning. Banks are not only earning from interest, they are earning from other sources as well. This is schedule number 13 is the answer. Which one of the following is not amongst the benefits of core banking? It supports multi-currency operations. It provides 24 into 7 operations. It provides improved customer satisfaction. It increases bank profit as customers are charged extra for core banking. What would be the answer? The answer to this question is core banking. 24 into 7, they are there definitely. But it helps, is not na. Okay. I was thinking about is. This is there. Multi-currency is always there. This I've seen more or less the forex work happening on the CBS itself. It improves customer satisfaction. Yes, it takes lesser time, but it doesn't increase the charges. Rather, it is helping the company a lot. The less bankers are required to work upon many customers. So, right. Okay, everyone. Let's end this session here. I hope this particular session was helpful for you. But before I end my session, I think let's go through. Achha, one more question is left. Let's talk about that question as well, and then we'll be ending it up. Which one of the following statements is not correct regarding computerized accounting? Business transactions are captured in the form of accounting entries. It offers benefits of speed and accuracy. Computerized accounting is providing speed and accuracy. Higher cost as compared to human labor, or mostly digital computers are used in computerized accounting. Digital computer are used, then business are captured. There's only one thing wrong, that is C. Higher cost as compared to human labor. Human labor was hard to maintain, and there was more or less disorientation as well, because sometimes people are not able to coordinate when we have a huge number of people working under us. Now this has become easier, right? So that was the last question for the day, everyone. I hope this session was helpful for you. First of all, please like the particular session. It is really, really important that we receive that love and appreciation from your side, because this becomes the reason that we work harder every single day. Because we know that you are looking at these particular classes, and these classes are actually helpful for you. Before I end my session, everyone, one more important point: what to do today. If you're preparing to purchase any of the courses, then go ahead and do it right away, everyone. What you need to do is, if you're planning to buy our victory batch, the victory batch is starting from 6th of February. And what you can do is, you can use the code Y541 and get it for 4199.79. In this case, you will find 350 hours of online classes, 276 test series, ebooks. We four people are there in these particular sessions. Amanjot ma'am, Suprabha ma'am, me, as well as Vishal sir. We four people are there in the victory batch. Or if you are planning to purchase the Mahapack, JIB CIB Mahapack is also there. Complete JIB Mahapack is also there. You can take up any of these batches. If you're planning to go for both JIB as well as CIB, go for 24 months. You have 2 years of the planning. And what you need to do is, you need to use the code Y541, and it will cost you 11,023 for one particular year. If you're using it, if you would have been following me from the middle, even in the middle, I've just said it, 6,800 something was the price for 1 year. For 2 years, it is 11,023. 24 months is better than 12 months pack that you're taking up. At one point of time, you have paid, not even a single penny is required to be paid. After this, in terms of JIB or CIB, optional subjects all covered, English medium all covered, bilingual all covered, test series covered, practice paper covered, ebooks covered. What else is left? Whatever we'll be including in the next 24 months, it is all available to you. Whatever we have done in the last 1 year, 2023, all those batches are also available with you. If you are doing it beforehand, you can use it. So this is all that we can provide you in this specific area. Please go ahead and check it out on our website or in our app for further details. And don't forget to use the code Y541 to get this Mahapack. And if you're interested in any of the other Mahapacks or the particular packs there, use the code Y541 and download the app. With the app, you get 1% extra. It is right now available at 79%. Use the app, it would be 80. So go ahead and check it out, everyone. Thank you so much. Bye bye.